Tesla had a terrible day, they missed expectations. I think it's time for a management shakeup. The management has messed up this year a lot. They have significantly lowered car prices to increase sales and increase their market share, but it hasn't worked. Their market share overall is still rising, but there's been no acceleration despite all the price cuts. And despite them decreasing the cost of goods sold per vehicle by a few $1,000s since last year, all the price cuts have been so bad that their gross profit actually sank by 22%. And revenue only grew 9% year over year. Their strategy of cutting prices has failed horribly. They thought Tesla car sales were elastic. They are not that elastic. If you don't know what elastic sales is, if I increase my price by 10%, I expect sales to drop by 10% as well. If I decrease it by 10%, I expect it to increase by 10% or more. This is what an elastic price would be. If I cut my prices by 10%, but demand only grows by like 3%, that is an inelastic demand. The management thought Tesla was elastic. It turns out it is not. The Tesla, after all, currently is a luxury car. It is a very expensive. EV cars in itself are very expensive right now. And so even if you cut prices, people who are gonna buy a Tesla were gonna buy one anyway. They blame this on the high interest rates. They say as soon as we're out of high interest rates, we will be able to sell. Their competitors are not suffering the same issue. The auto industry is still growing, and their margins are fairly stable. Only Tesla's margins are collapsing and revenue growth is going down. Of course, they were never gonna stay at those 70%, but at the current valuation, around up here is what's needed. Elon Musk says he expects deliveries to increase by 50% year over year for a few years, but with their valuation, 40% is probably calculated. We will come to the valuation later. So the current 9% is just a complete failure, and even worse, in the car business, it's what, only 5. This was held up a bit by the energy and services segment. Tesla has 26 billion in cash on hand right now, and they're not investing this money. They're not earning any interest income on this. If they would invest this at 5% in a money market fund, which they can do right now, 5% right now would earn them another $1 billion per year. And it is absurd that they're not doing that. Tesla's management is acting like they're in crisis mode, that the company's gonna need billions of cash in the next few years, and in that case there would be 2 scenarios. One, Tesla's gonna have a crisis, and they're gonna need that cash. Well then, why is Tesla's valuation so high? Or 2, management is just letting that cash sit around. And both scenarios, I don't really like, to be honest. Yes, they are investing a lot right now, but they basically have 2 years of capex just sitting on the books. That doesn't include any free cash flow that they're making, even though it's very little right now, but that is just a one-off. It's probably gonna recover a bit. But they're still making $1 billion per quarter in free cash flow, even when it's extremely low, and they're just letting so much money sit around doing nothing. And the best thing about Tesla as investment was that they were able to get that higher price for the car. They were able to get this high operating margin, and now it's going back down to the regular levels of the automotive industry because of all these price cuts. And they're probably gonna continue the price cuts, because they're just not seeing any results. Deliveries are just not growing at the speed they want to. Yes, full self-driving is developing, cumulative miles driven are going up, of course, more Teslas on the road, more data, full self-driving is gonna get better, and maybe eventually they're gonna have robo-taxis. But if you've gotta think about it, even if they get to robo-taxis first, maybe that will make them a lot of money, but eventually someone else will get in. They won't have a forever mode there. So even if they have a few years of billions of dollars, that is not as long-term as having high vehicle margins where they have a lot of money coming in. So then we gotta look to the 2 segments that are currently doing okay, energy generation and services. On a gross basis, they're barely break even. Energy generation, 1.5 billion in revenue, gross costs of 1.17. This doesn't include anything other than the product sold. Services, 2.16 billion, and costs of 2.037. So they're probably break even net. Gross, they're profitable, but that is not enough to give you as a shareholder returns. So what do these segments include? Services includes everything like you driving your Tesla to the dealership. For example, they're bringing out a service that you can make your vehicle be wrapped by Tesla officially. It also includes the superchargers. It is not a big money maker. People are saying that the insurance side of the business will make a lot of money, but car insurance is very hard. It's very low margins. Yes, they have the data advantage, but all the other car insurance companies also have data. Not as much as Tesla, but even if Tesla achieves a slightly better margin, it is not going to be a lot. Energy generation, the solar side of the business, and the storage, yes, it has some potential, but it is not big. It requires a lot of capex for many years to come. So maybe in like 10 plus years, this would be a moneymaker. Until then, it will not provide you free cash flow. The company is still diluting you. Despite having free cash flow, for years they have been diluting you. Stock-based compensation just continues to go up and up and up, currently sitting at nearly 500 million. They made 800 million free cash flow, so less than 400 million in free cash flow. So we can see the strategy of management has just failed. Margins are plummeting. Deliveries are not increasing at a faster rate. Tesla would be a great business with a premium car. You could kinda imagine it like Apple. Apple is not the market leader because they're cheap, but because they have a phone that everyone wants. A great brand. Tesla is a great brand. A lot of people want a Tesla. It doesn't need to be cheaper than the competitors or at the same price. Then you could get a great margin. Then you could add extra services like full self-driving onto the car. And management has just completely thrown that out of the window and said, hey, our car needs to be as cheap as the competitor, and we're gonna have the same horrible margins as our industry. If we take the average over the last few quarters, we would get to a free cash flow per share of 1.7 after stock-based compensation. Let's say Tesla continues at the current pace. Maybe they're gonna grow at 20%, because they're still gonna grow sales. But this is a very generous assumption that they're gonna grow at 20% for the next 10 years. I don't think that's very realistic, but I want to give them the benefit of the doubt. 15 multiple, it is a car company. As long as they don't make the money from other stuff, as long as we just hope full self-driving and all of that will come into effect, it will stay a car company. 10% required return, share price of $50. You can see that doesn't work out. What if management actually is right? Deliveries are gonna rise more than the price cuts. 25% and then 22% afterwards, and the market gives it a higher multiple, still only halfway towards our current value. What if it goes very bad? Car sales continue to do poorly, they're gonna continue to cut prices, and only a 10 multiple because then it's a struggling car companies, not growing anymore. Well, that would be the share price of 14, which I think is around what Ford is trading at right now. If the company would grow at 40% for the next 5 years, and 30% after that and get a 20 multiple, then you would make money on Tesla. They're already struggling to grow in the double digits right now. So the upside at Tesla is not a lot, and the downside is a lot. Tesla has a strong brand, people want a Tesla, the management is giving that advantage away right now. If a company wants to make its prices as cheap as possible and help the EV adoption, sure, but I'm not a charity. I want to make money. If you want to invest in Tesla because they're going to do that and they're going to make the planet better, sure. Probably gonna get a lot of hate for this video, but I stand where I am, you stand where you are. It is my money, not your money. If it's your money that you want to put in Tesla, that's fine by me. I'm not complaining. It doesn't impact me at all. Thank you for watching. Have a good day.